The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Good morning, everybody. Welcome back to another live stream. Happy Monday to you. We are back in the studio, back in the office for another week of fun. Everybody having fun? Kind of a crazy 72 hours, I've got to say. Hope everybody had a nice weekend. I certainly did, minus what I was talking about with the producer behind the scenes. My football team lost, but unfortunately my football team is not particularly great. For those who care, for my American friends, I went to Auburn University, War Eagle. So, you don't hear as many War Eagles as you used to, I guess. Anyways, you'll still hear it from me. NASDAQ jumped up 2.75% here. I mean, what happened? What took place over the last 72 hours in financial markets? Well, maybe an easy acronym for it is DACO. Roll Tide from the producer. You can see we have a house divided here a little bit, kind of. I mean, we could divide it 3 ways because we have, for non-Americans, these are 3 rival football teams. They all kind of dislike each other. UGA is in the building, Alabama and Auburn, and I don't think any of us really like each other per se. No, people-wise, we like each other. Team-wise, But Auburn is the least of the 3 threatened right now. What's going on? Taco. Ivan's got it. Taco Tuesday, except it's not even Tuesday. The taco trade is still alive and well. What is a taco trade, you might ask? Well, it's essentially the idea that on Friday we had some strong words from the president, kind of accusing China of monopolizing the semiconductor trade, rare earth metals, materials, etc., saying, hey, they're squeezing us out of the picture. We're going to impose substantial tariffs on China. And then on Sunday, we got the post from the president, which was much softer on China, saying, don't worry about it. Essentially, I like President Xi. We're going to work something out. It's going to be fine. Don't freak out. And so the crypto market had some of the craziest swings I've seen in a very long time. Ethereum dropped on Friday, peak to trough. We're talking about a move of 20%, guys. Ethereum, 20% peak to trough. We bounced back from the lows at 1.20% back. Crazy volatility. You take a look at the NASDAQ, for example. On the NASDAQ, high to low on Friday, we dropped almost 5%. Today, we are looking at a bounce back of more than half of those losses, almost 3%. Take a look at a Fibonacci retracement from the high to the low. You got a sharp bounce back. Now, I'm still long my NASDAQ trade. I took an initial position on Friday. Admittedly, I was sort of fingers crossed, hoping that we would get further decline. And we might still, it's not out of the picture. But I went long because the taco trade is it's been so consistently the same strategy. Trump says something big and shocking and then walks it back a few days later. That's exactly what we had happen. And I think it was made worse. It was made more prolonged based on the fact that it was Friday. And so people were like, I'm getting out of this market before Monday, because a lot of people all over socials, myself included, like I was expecting a gap down. We're all looking and saying, okay, this market's going to gap lower on Monday, and we could be in for a little bit of rough times. But I bought the NASDAQ and discussed this inside of our chat room. I'll explain kind of why I took the trade. Somebody pointed out that, the gamble paid off for those who essentially bought the dip on Friday. And while there was some high levels of uncertainty to it, it wasn't a pure gamble in the sense that it wasn't like an all-in, I know it's going to move higher. I made this point. Part of the reason I actually took the buy on Friday, and I didn't take a huge buy, so it wasn't a massive, trade. It was a good size trade, but not like I still had hopes to see lower prices to buy some more stuff. Anyways, the reason I took a buy on Friday before close was because people were unwilling to go into the weekend long. Everybody was running for the exit to close out of trades before the weekend. This led to what I believed was overdone selling in the short run to avoid the overnight risk. Everyone bailed on Friday because they didn't want to hold it over the weekend. But those who did buy were compensated for taking on that extra overnight risk due to the high implied volatility. We saw the VIX spike by 30% on Friday. That high volatility, typically spikes in volatility, historically speaking, are better buy opportunities than sell opportunities. Not every time and with no certainty, but generally buying high volatility environments has rewarded people who take the risk, right? In history, much of the gains from the stock indices has actually come from holding the overnight risk. Nobody wants to. That's why people who do usually get good prices, right? Think about what we're talking about. It's called risk premium. While it doesn't work every time, over time, it has been better to hold the overnight risk than to sell out before it. So I bought the dip on Friday. Now, I didn't know that that was the bottom. And it might not be the bottom. Like, we could still see this thing roll over. You could call this a dead cat bounce. But again, I bought the dip because generally I still like stocks long. I've been waiting for a pullback. I got long on Friday, put a stop below, narrowly missed getting stopped out on Friday's trading, and I'm still long the NASDAQ. So if we roll over from here, which low-key I would be perfectly fine with, like if we rolled over and got lower prices, something flares up with China and Trump again, we could very well see the NASDAQ reverse lower today. There's a lot of stuff on my shopping list, and I got to show you something, guys. And James, I'm excited to show you this too, because I've been working on this behind the scenes. So this weekend, I poured a lot of coffee, sat with my cats, and churned through what you're looking at. This is the new Edgefinder AI market scanner. I'm so excited about this because it does something that I try to do in my videos automatically every day for Edgefinder users. The new feature here, the AI market scanner, it's missing this component. This is not yet done, but don't you worry. We got some really smart people, smarter than me. He's working on building some cool AI stuff, which is going to take what you're seeing here and create a readable summary generated by AI. What you're looking at, what's up, Sean? Hope you're well too. Good to see everybody here. I know I jumped right into a bunch of stuff, didn't say hello to everyone. I hope everyone is doing well. I hope you had a nice weekend. Crazy stuff that took place in terms of, Trump volatility is totally back. Or at least it was back. Maybe that was it. Maybe Trump saw the reaction from the market and said, actually, you know what? I don't really want all the smoke, and dipped out. We'll see. Anyways, here's the thing. What you're looking at is the new scanner. And what this new scanner does is it helps to simplify what the Edgefinder found. Now, you can do this in the top setups page, but the reason I built this page specifically is because it groups things visually in a way that I think is really easy to understand. Watch me do a breakdown on the NASDAQ really quick with this new scanner. NASDAQ is getting a bullish rating. Technicals look a little bit mixed as we lost a little bit of that clear upward trend on Friday, a little bit mixed. But again, if we get a rebound here, trend is likely to flip back into bullish territory. So we'll give neutral for technicals at this time. Institutional activity, however, COT data, the latest data that we do have, institutions have been buying. Okay, so institutional activity, we'll call that bullish. Sentiment analysis, the crowd got scared on Friday. That is a bullish. Crowd sentiment is mixed. Actually, this is definitely a bug. Should say something different there. So forgive me. We are still, we put this disclaimer. This is still the beta version. This needs to be actually saying that crowd sentiment is bearish. Because crowd sentiment got super bearish. We talked about that with the put to call ratio on the Sunday video, if you saw that. Bullish overall sentiment wise. Let's keep going. We could take a look at economic growth signals. GDP looks good. Manufacturing PMIs look good. Retail sales look good. Services PMIs not so good. Overall, we still get a bullish rating. Jobs market signal, employment change, NFP report, not so great. Unemployment rate, neutral. Bearish signal for the jobs market. Inflation data. CPI looks okay. PPI looks good. PCE neutral, and interest rates are trending lower. Bullish inflation data signal. What's the final result? The Edge Finder has determined the NASDAQ looks bullish based on this set of factors. Does that make sense? Let me know. Give me some feedback on this, because and be careful with my feelings, because I literally spent like all week working on this tool. I know it looks, may not look super fancy, but it was a lot. So if you could help me out, if that was more clear, like if that broke something down for you in a way that was understandable, then I want to feature it more in my content. Give me a 1 in the chat if this new feature helps to break down what the Edge Finder is finding, and I'll show it more often in my videos. We could do a lot of different charts. We could also, someone asked for Dow Jones. Here's the Dow Jones, right? So Dow Jones, what we can see here is that we have Edge Finder bullish bias, economic growth, institutional activity. You can kind of just get a pulse check on what the Edge Finder is thinking without having to go through every single data point. Or you can still do what we're doing here by using the top setups page. It's not necessarily a complete replacement for top setups. It's just if you specifically like trading gold, right? You can navigate to gold and give me a breakdown on gold for me to start my trading day. That's the purpose of this new feature. Okay? Lincoln, I saw your message. Lincoln said terrible and then said terribly amazing. Thank you. Okay, cool. I got a bunch of yeses or ones in the chat, so thank you. Thank you for that feedback. Again, goal is to make it more visually appealing. I did get some feedback from some users who said they also do still want to be able to see the data somewhere. So I'm going to probably make either another variation or keep the old variations where you can still look at the data points in more isolated way. But the purpose of this page is not to give you a wall of data. It's to give you a general synopsis on what the Edge Finder is finding or thinking. Anyways, so stock market opens up in 20 minutes. We had a substantial turnaround in sentiment over the weekend or on Friday even. Check this out. If we go to our put to call ratio and look at SPX options, look what happened on Friday. Like, it's understandable why a lot of people were very upset over the weekend. My comment section was full of very angry people, not necessarily at me. I mean, maybe some were angry at me. That's not out of the ordinary, but they were mad at the situation. Why? Because on Friday, a lot of people got scared and bought puts or got bearish in their sentiment. They sold out of their stocks. They sold out of their cryptos. They panic sold, right? That happened in mass on Friday. I'm not saying that out of speculation. I'm saying that because we can see the data. The put to call ratio shows us options flows, and we saw a huge surge on Friday in put demand. So people on Friday got scared and sold out. They said the taco trade, or they said that the Trump tariffs are back and he's going to crash the market. And then the taco trade came full swing. What I mean by that is on Sunday, he reversed the sentiment and sounded soft on China. He went from super hardball to really softball, right? And so there was understandably a lot of people who were very upset with this because they were like, what the heck? You know, Trump comes out and says, we're basically starting trade war 3.0 with China. And then by Monday, he's like, we're all good. So a lot of people were thrown off. A lot of people were very angry over the weekend in my comment section. And understandably, that is a frustrating turnaround. Can you imagine if, and I say this like cautiously, because I know there are people who are going through this, and I'm not in any way celebrating or laughing at this person, but many people probably got liquidated. Their leveraged positions got blown up. They lost a lot of money on Friday, only to turn around and see on Monday that might have been it, right? And understandably, that is really frustrating. And I see that sentiment a lot in my content. Bro, really went psych. I was kidding. Yeah. What is put to call ratio? It's just a ratio that we have here that shows us the volume of puts versus volume of calls traded. Calls are bullish bets, puts are bearish bets. When this thing goes up, it tells you the crowd is bearish. When this thing goes down, it tells you the crowd is bullish. We use it as a sentiment contrarian indicator. On Friday, I talked about how this flaring to the opposite extreme to high put demand, in my view, was a potentially bullish bet. And so I took an initial small long position. I liked the NASDAQ. I mentioned this in my video on Sunday, that essentially I went long the NASDAQ with small size because we're getting strong bullish reading here on the Edge Finder. Again, I still think the NASDAQ has upside. I don't think that this singular kind of event is going to completely derail what has been a really strong upward trend technically wise. And, you know, the fundamentals still look pretty promising to me in terms of the US economy. We have rate cuts on the way. We have unemployment at long-term lows. You have growth metrics that look pretty good. Again, we have GDP that looks good, manufacturing PMIs, retail sales, interest rates are coming down. The producer price index looks okay. So we're not seeing huge pass through on the tariff inflation stuff. CPI, same thing, looks okay. The point is, when we look at the overall summary, NASDAQ is still getting a bullish rating. Yes, there was some scary tweets and scary posts, but to me, the dip was buyable, and I made that point in my Sunday video, and I did buy a little bit. Now, I wouldn't mind if it does roll over more. I wouldn't mind it because I could build some bigger positions and stuff that I like for the longer term, but you are getting a really sharp reversal. Here's SPX here this morning. Here's the Dow Jones gapped up here. Again, US stock market opens up in 13 minutes. Hong Kong 50 here jumping up. The Japanese stock market jumping up. Again, market loves to play gotcha. And maybe the only person who loves to play gotcha more is Trump. Because again, he took full-blown reversal in terms of the sentiment, right? We went from, you know, we're going to fight China to the end to China's our friend. And what about the absence of macro data due to the lockdown? That's a good question. I've seen a lot of people asking about that. So my thought is on that, all we can do is go off the latest. All we can do is look at the latest available data. Sure, we don't have newer data than that, but technically you always have more data that's coming. We're just operating based off what we do have. That's been the approach. I think that's also what the Fed is likely doing. I think the Fed is probably saying, hey, we don't have every ounce of new data points. Let's take what we have and let's work with that. I would also add that you do have this week some stuff happening. Specifically, you have a lot of big banks reporting earnings this week. So why does that matter? Well, banks give you a lot of indicators about the economy. Think about it. The economy flows through banks. Loans, credit card delinquencies, the financial sector is very tied to what the economy looks like. So even if we stay in lockdown, government shutdown, very much so will people be looking into the earnings calls and reported information from key banks in their earnings reports this week, where they will disclose some information that could tell us a little bit about the consumer and how things are holding up, since we are in sort of a blind zone when it comes to economic data. Gold and silver continuing to push higher. My goodness, gold and silver are monsters here. Despite some of the worries kind of wavering, we still around the Trump tweets, posts, we are still seeing gold and silver continue to push higher. Perhaps a little bit of some elevated worries about, maybe this thing is not over between Trump and Xi. Maybe they still have some arguments to take place. Who knows? Some back and forth. But at least in terms of what's happening in the stock market, we are seeing a complete reversal, at least for now. We'll see if that maintains to the upside, or if this fizzles out and pulls back. I don't know. What do you guys think? Is the market headed higher here? Like, are we just going to melt up back through the highs, or is this a bounce to be faded? My opinion is I think it actually has room to continue higher. Just because the market loves to play gotcha. Everybody got scared, sold out, bought puts, made bearish bets. A lot of people I also think this is a deleveraging event. So on Friday, you had a lot of people got liquidated in their leveraged accounts. A lot of the crypto space got blown up. And now I think you're seeing people take advantage of the liquidation prices, essentially. So that's my opinion. I think you had a lot of people get wiped out on Friday. The leveraged crowd got taken out, and dip buyers are in there stepping in. That's my opinion. Check on the VIX. Yeah, down 7% from those highs of Friday. I still have some VIX calls. I had 3 VIX calls. I now have 1 VIX call remaining. I have out to the December 17th, strike price $20. So I could close that out for some profit here today if I wanted to. In fact, I may do that because again, I bought VIX calls somewhere around here, some more over here. So I've been accumulating some VIX calls in this situation. VIX has jumped significantly here on Friday, come down a little bit since then, but still remaining elevated. I think this is part of the reason why gold and silver are also seeing some interest. You're seeing some elevated uncertainty with the trade stuff. We'll see. We'll see what happens with it. By the way, guys, just a quick little bit of an update. We're doing a free webinar coming up pretty soon. It's going to be next month. If you're not in this and would like to join, would love to have you there. We're going to be talking about our best trade setups for 2026. We do this every year. This year, there's 3 of us. There's myself, there's Chris Pulver, and Marco. We are going to be taking on the markets together, talking about our best trade setups for next year. If you want to join this, it's free to join. Step 1, just join our Telegram channel. Maybe, James, we could change the QR code on the screen to join our Telegram channel. If you guys want to join this, again, it's free to join the Telegram. We post trade ideas throughout the week, updates on what's going on. We have like prop firm discounts that we drop, giveaways, things like that. So if you want to stay up to date with what is going on in markets, it is free to join. We'll drop the link here in the chat to where you can take advantage of that. And then, yeah, you can, when is the webinar happening? November 17th. All you need to do to register is just fill out the form in the Telegram right now. If you're already in there, just click this, fill out the form, and it will send you all the information you need to know to come to the event. We would love to have you there. Here's the Telegram link right there. Simply scan the QR code right there or click the link in the chat to join the Telegram, get some updates on what's going on there. The dollar index also bouncing higher here today. So I'm long UUP, which is an ETF that tracks the dollar. I'm logged out of my brokerage right now, but I am long UUP. DXY I think has further to go higher. I think we're headed up to 100 on the dollar. So we'll see. Part of the reason I chose NASDAQ over something else is because I do still see dollar strength. Now, those two things are in tandem. They don't have to move inversely to each other. Sometimes people think that like, oh, dollar up means stocks down. Not always. But specifically, I think that the NASDAQ can potentially continue to outperform because I think that interest rate cuts are coming, but I don't think that they're going to be as quick as some of the market is thinking. So if you think the market's going to cut rates a bunch of times, and that's very likely to happen, you may look closer at something like the Russell, which is more sensitive to interest rates, moves up or down more than other indices based on what interest rate projections are doing. The NASDAQ also definitely moves off of interest rates, but it has a bunch of big players that are less sensitive to interest rates. In the last few years, look at the comparison of the NASDAQ versus the Russell. And the reason I think the NASDAQ has done so well is because you have these huge companies that don't need to borrow money, right? Apple does not, they're not hurting to borrow money. Google is not hurting to borrow money. So if interest rates go up and it's very expensive to borrow money, those companies aren't super negatively affected. But a Russell, small cap company that's still trying to grow and is much smaller is way more negatively impacted on average in that index than, say, the NASDAQ. So I chose the NASDAQ. I think that, dollar strength could come on the idea that we have strong economic data in the US compared to expectations here. We could take a look at dollar Swiss, which is another trade that I'm long right now. This is definitely also another bug. I got to fix this. I'm just going to mark this in my notes because I'm still fixing this new feature here. USD CHF, Eco Growth Gauge. Okay. Everything else looks good on this page. This new page is still in beta version. It is the new Edgefinder AI scanner. I'm really excited about it. However, we're still tweaking it to make sure everything is functional. And it looks like this should be blue. So I'm going to fix that after. What do you think the top is on gold? No pullback at all on gold. Yeah. I'm just not willing to try and call a top. I think that's been the most painful trade of the year, has been trying to call the top on this gold move. Gold is interesting because gold can make a move. People who have looked at this on the higher time frames know gold can go nowhere for a decade and then double in a few months. That's how crazy, well, maybe not a few months, but in a year and a half, which is what has happened here. Gold is a bizarre, it's different than other things. Look at gold. So if you're somebody who says, I just want to buy gold and it's going to go up forever and I don't want to trade it, I just want to buy and hold. I get that. But look at this. Between 1979 and 2004, your returns were 0%. That is, what is that? 25 years, 26 years, gold went nowhere. My point with saying that is that when it comes to gold, and I mean, if you were buying it over here, you saw, what is this? That's almost 30 years where gold went nowhere. 30 years. So if you took 30 years from now and said, if gold, think about this. There is a possibility, although I don't think it's likely, it is still possible that in 30 years, gold is in the same price where it is. Likely? I would say no. Possible? Sure. So gold is in melt up mode right now. The trend is your friend. Momentum to the upside to me makes sense. This is not something I try and fade or call the top on. But understand here that gold is, when it wants to move, there's no telling how far it's going to go. And when it wants to just not do anything, it could stay there forever. It could stay there for years and years, right? So what's the way to play gold, in my opinion? Dip buying, that's it. Dip buying with stop losses. That's to me the only way to play gold. Now, if you're saying, well, when are we going to get a pullback? I don't know. And I've been saying that for months now. I don't know where a pullback is coming on gold. I'd be a buyer if you got one on a longer term basis. I think there might be some opportunities. I'd have to look at the macro at that time. But the only play for me on gold is long at pullbacks. I don't like the idea of shorting gold. Shorting gold has been the most painful trade this year, or one of the most painful trades this year. So it's not something I'm looking to do or interested in doing. U.S. stock market opens up in 1 minute. We'll see what happens here. Let's just pull open our all markets view just to see U.S. stock exchange opening up here in the next 30 seconds. You've got U.S. stocks here. You've got the Dow Jones, the NASDAQ. Why do I have two NASDAQs? This should be SPX. I'll just throw this on. So SPX, Russell, gold, Bitcoin, oil, dollar. We did the NASDAQ put to call ratio. Actually, no, I didn't. I did the SPX. We'll look at that in a bit. Let's see. Let's see what we get in terms of U.S. stock market just opened up. We'll see if we get any volatility out of the gate here. Again, a huge reversal, huge sell-off, huge reversal. These types of moves are the types of moves that are, as weird as it is, we expected big volatility because the VIX shot up higher over on Friday. So yeah, how's your NAS long? It's looking okay for now. We're still in the trade. I'll show you the NAS trade here. So I'm long the NASDAQ. I barely survived this, to be completely honest. Like I went long NASDAQ on Friday and almost immediately price just went against me and then reversed, gapped up. So very close to stopping out of the NASDAQ. I did not stop though. So we'll see what happens here today. I've been asking the audience to let me know what you guys think. Is this going to get faded? Or are we just going to go right back and recapture those highs? I think you're likely to get a big move one way or the other for the rest of the day. The reason I'm saying that is because the market thinks we're going to get a big move today. The VIX is at 20. I guess that's not a huge move. 20 VIX is just big compared to what we've been used to. We've been used to really low volatility periods. So I think you're going to get a bigger than usual move in the NASDAQ today. And my guess, educated guess, I have a stop loss in my trade in case I'm wrong. I think we are going to keep going higher. We'll see. I've also said that I would prefer the thing to stop me out and go lower because I'm still sitting on some good cash sized position in my portfolio, meaning I have available cash to buy dips in the markets if it does continue to dip. If it doesn't, then I'll just take this trade and run with it, try and trail stops on it. But we'll see. The gap will be filled. Yeah, I think that's the consensus. A lot of people think the market's going to keep going over. That's part of the reason I am long, not to sound cheeky, but I am looking at something like the put to call ratio screaming higher on Friday as a contrarian bullish signal. I think everybody got scared and expected it to go down, hence why we, in my opinion, may still keep going up. Again, I hope I'm wrong. So if I'm wrong, I can build some bigger positions and stuff that I like. There's a lot of stocks and ETFs I want to buy on bigger dips. So I was hoping we would actually get a bigger dip. But from a trading perspective, my system and strategy told me take an initial long, and I did. So we'll see. Dollar index also bouncing higher here today from yesterday's or Friday's sell-off. We'll see if it can make a move higher. By the way, guys, if you're not in our Telegram channel, we are going to be keeping everyone up to date with what is happening next in all of this stuff. If you're not in our Telegram channel, we are sharing free trade ideas throughout the week. We're doing chart coverage of currency pairs, gold, SPX. Our research team here is posting charts behind the scenes, as well as our bonus charts of the day, putting together a bunch of content to try and keep you guys up to date. If you're not in the Telegram channel, it is free to join. Take a second right here or use the QR code that you see on your screen. If you're watching on a TV or something, just scan the QR code. It will take you to Telegram and you can join our channel to stay up to date in case you aren't able to watch every stream and every video. With that said, guys, up next, we've got Ivan taking over the stream. He's going to be talking about trade setups and ideas coming in just after this quick break. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello everyone. Sorry. The thing here is that when you have these kind of events and it drags you down, it sends you across the board, and you're wondering to yourself, what is going on? I remember as a small boy one day, and I remember that it absolutely destroyed my mood. It destroyed my day and probably my week or even my month, that something that happened on Friday would happen to me, right? So when we opened on Friday, or sorry, when we closed on Friday, market looked like this. And to be frank with you, I thought I saw stars, I saw rocks, and I saw bottoms. I mean, I thought this was going to go downtown. Why would you say so? Because the reason for, and I feel like I don't know if Nick even touched it enough, in my opinion, the reason why this is so touchy for the stock market and NASDAQ is because it's rare metals. It is nobody else in this world that can give it to you other than China. So, and it's also why stock market and NASDAQ has had such a great rally, is because NVIDIA and other companies are absolutely in need of these rare earth metals. So that's why I would say that's a bad situation. Now, we had a meeting yesterday, as always, and I mentioned, okay, I think we're going to be a risk off. I think we're going to gap higher. I think that this is going to make new higher highs. I think this is the bottom I've been waiting for. I feel like I look like a lunatic that I've been talking about this bottom or this pullback for a very long time, even though the market went much higher. And then I said, okay, I want this to pull back. And sure enough, it made a pullback. So in Norway, we have something called Taco Friday. The capitalism and the PR people have made it so that there is cheaper taco items to buy on a Friday than any other day of the week. So, yeah, Taco Friday is a thing. Now, yesterday we had Taco Sunday. Why did you have Taco Sunday? Because Trump always chickens out. That was yesterday. So I don't know if we're gonna rebrand that day as Taco Every Day. Mexicans are gonna love that. I'm gonna love that. I love taco. But in this case, I believe we should make higher highs and higher lows based upon this very simple head math. Is what is the likeliness at this current stage of an escalation, meaning Trump is going to come back and say that she is what he said before. He's a difficult person. He's only there to destroy. I don't know. You said destroy America. Some derogatory statements. Trump apparently doesn't like Xi anymore. How likely is that at this moment? Not really. He seemed to be very fond of Xi. So, how likely is that to happen? That he's going to change his mind? Well, that's what you have to put into your equation of where the market is going to go next, because everyone has to make that equation. Another equation is how damaging is said tariffs, and how damaging is said, or how likely is said tariffs to come into effect? And right now, market is like, well, we don't know. We kind of put ourselves in the middle. And what generally tends to happen in a market that generally falls about, what is it, 3% over the weekend on Friday or something? 385. What that happens, and what tends to happen, is when there's no more escalation, we tend to go higher. And I would argue that a gap higher was said higher. Now, where we're going to go now, I do not know. And I think I made it pretty clearly, even though there's no financial advice whatsoever intended, is that from now going forward, it is a bit of a bouncy ups and downs. Not because that's what the market does to try to divert you from what's going to happen next. It's more of, again, what do we find likely at the current moment to be the most likely scenario going forward? And the only one to make a lower low is an escalation or a trade war or high tariffs or more than what we already have, more than 100% that Trump said. But just have it very clear, as far as I understand the history, is what it was China that first restricted. And then Trump came back and said, hey, we're going to put tariffs on. And then China comes back and says, we're not going to budge. And then America comes back and says, well, Xi Jinping is a great guy. Make that make sense. Taco means a very different thing in Kenya. I do absolutely know that taco is something very different. But that's not the discussion today. I do not know if it's possible. But again, over to the team. The team would know more than me if that is possible. To have a verified. I don't know if Telegram offers that. I don't know. I do apologize for not knowing that on the top of my head. I know other has, but I don't know if they have. That definitely should be something we should look into. So coming over to my trade setups, and as the self-proclaimed and by others proclaimed, what do you call it in English? Yen man. I have to say that today is a bit of a different day. We had the drop. Yen would be strengthening because dollar is in the equation, so the strength and the risk off goes to yen. On the flip side, Aussie also becomes a collateral damage because it is dependent on China doing well. But the thing that came out this morning was of a better sounding, interesting situation, was that, if I remember correctly, there was an 8% increase in the exports. So China is actually not doing too bad, actually, and way better than expected. So 8.3 increase in exports year-over-year and increase in imports. That should, over time, if that is kept going on, that should lift the Australian dollar. That's why it is so funny and so interesting to look at Australian dollar, US dollar bullish position for me. And that is just risk. That is just money flow. There's no fundamentals behind it right now. But that would be my general direction. Same thing for New Zealand. Even though New Zealand currently is having a bit of a depressed moment and a depressed day, I believe that going forward, we should have a higher high and higher low. That also means I need to wait a couple of days. It's not really great at the moment. And hookah, I absolutely do not know Swahili, so don't worry about that. And then I've said that we have. So this is a bit of a funny one. I'm all about risk. Sorry, I'm all about money flow. Okay, so if you have Euro New Zealand, just a bit of a thought process. This is the only one of the other commodity pairs I do like. Because euro, right? Euro against the dollar, right? Is what is it? 80% dollar or something in that direction. For New Zealand against the US dollar, they always go opposite. So whenever dollar goes stronger, New Zealand goes weaker. So this is, for that matter, a dollar move. And Euro New Zealand seems to be, let us say, when New Zealand gets stronger, dollar gets weaker, this one turns lower. And from now on going forward, it has a very strong seasonal move. And I really love that. So if I find Euro New Zealand from now, I believe it should be about now until 7th of November or so. Would you look at that? Should be about peaking about now and fall going forward. By the way, absolutely smashing job by the team here on this seasonality. Absolutely love it. So for me, that's another one that I need to keep a very close eye on. We are making new lows now. That is even better. But for tomorrow, I really want by European a pullback to not financial rise whatsoever, but if I can get up to 202, 6 or 7 or something in that direction, not down here, I would be much appreciated, market, if you can listen to me for once at least. And then hold that until, when is the monthly target going to be hit? I don't know, Tuesday, Wednesday, Thursday, Friday. Yeah, how many weeks is it? 2 weeks from now or so? That would be lovely. So the monthly target is 196. I don't think it's possible, but I mean, everything is possible in Forex, isn't it? So if I can get a good 600 pips out of it, great. Maxi, are you with me on that? Maxi is Aussie dollar long already. That's a bit early, bruv. But okay, you do you. I'm not gonna hate on you. But my feelings are my feelings, right? I love that we have a diversity in the group, and you necessarily can do whatever you want. But it's called, you can do whatever you want under supervision. You're in New Zealand? At what price? Because I see you've traded, it was also Swiss yen last time I checked. And then, of course, gold. And then you had, Swiss yen. That's what I remember you were on. Not Euro, you're not Euro New Zealand. But okay. So my theory that I really want looks something like that. And then that needs New Zealand strength. That needs dollar weakness. That needs, for some crazy matter, euro strength as well. So you're waiting for it. Okay. Current price. So I'm not going to show, I don't want to show his chart directly, but something in the essence of something like this is what he's looking for. So a bit of lower price than me. Okay. That is okay. That is okay. Very good, very good, very good, very good. Slugmeister says, I'm in Euro New Zealand and New Zealand dollar too. New Zealand short. Okay. You want to sell 203. Okay. Why? Didn't you get the price yesterday a couple of times? Okay. Sorry. Which trades are you currently in? If I remember correctly, nothing. Of course, I have my SPS SP500. I generally buy until forever, anyways. But Forex wise, I took profit, and I am waiting for. You can see my face making a lot of faces right now. I love the pullback. I love the falls. I love the dollar. I love the yens. But as I'm trying to go through, I guess I'm trying to. It's not the same as will, but it does try. Is that dollar pairs did fall, right? That's all right. But then we have, and I'm trying to avoid being sucked into a large drawdown on dollar pairs, and then I believe dollar pairs should go higher. So, for that matter, pound. Pound is fantastic. Bravissimo. Much gusto. But the thing is I know that I am 50% chance of making money here. I can't buy here and I don't have a competitive advantage. That means I'm more likely to lose than to win, because this can technically fall. So how do I then mitigate that risk? Just make a new higher high. High low, and I hope that we should make a new high in New York session now, and then by London Open tomorrow, there's a pullback, and then I'll take it and I'll post it in Discord. XNS Omar says I don't share my trades on Discord. Yeah, I do. And I'm waiting for.
Hey, Ivan.
Yes, sir.
I missed you, man. I wanted to come say hi.
Oh, yeah.
I also heard you say you like seasonality within the new tool. When I built that, I thought of you. I was like, you know what? I always see Ivan wanting to make kind of the full year outlook, and was glad to hear you say you like that. So thanks for your feedback there.
Okay, like is kind of the Norwegian, the Norwegian version of it. Like that's very toned down and not very excited.
Mm-hmm.
But the American version is, I loved it. It's amazing, fantastic.
We do get really hyper about things, but yeah, I was glad to see that you liked it. And maybe let me share my screen here, just because when I was working on this, my thought process was, we have in the seasonality tool currently, we have this chart, which I think is pretty useful. But what I found is most people, it is more intuitive and more understandable to just look at the simple price trajectory over time of an asset. And I wanted to ask you, that's why I jumped back in here. So we know very clearly in the fourth quarter, there is typically a chase for performance on risk assets. We see this very clearly, not just in the SPX, but also in the NASDAQ, also in Bitcoin. Bitcoin tends to perform strongly towards the end of the year. The Dow Jones. I was just curious your thoughts on this. Do you think we're going to likely see continued strength in the stock market, but also we also expect strength in the dollar? I was looking at USD CAD expecting to see some strength here, at least in our 10-year average data that we have. Dollar Swiss franc also expects a little bit of strength. We've been seeing a little bit of tick up in the dollar. What are your thoughts on these for the end of the year?
Absolutely. Well, now I don't see any in any rocks in the sea for the stock market. Now we finally got the fall we needed.
Right.
That I feel like I've been in my own head saying I need a pullback. I need a pullback. I don't want to buy. I don't want to buy. I don't want to buy. And then here it is. And thank you, Trump. I got it. So for me now, as blind as I am, I think it's going to be a great year because we have had that kind of like the short term release. Now the only question is how much volatility are we going to get before it actually turns higher is a whole other question that I can't answer to. But for the dollar outlook and the strength, I see that happening as a short-term move because what kind of drove the dollar higher was one, the pricing of or the weakness in the yen went into dollar strength, and secondly, the pricing out of the extreme pricing out of dollar shorts, and more like a 50-50 situation for the FOMC meeting.
Sure.
So I for this year believe, as blunt as I am, that the dollar strength move has already happened, and this is a new trend to go lower. But I see the seasonality, and I should agree with it. But this year might be a bit different.
It certainly could be. I think that when you look at metals too, I actually agree with the seasonality potentially on metals. If we take a look at gold, because I know a lot of people are probably wondering about that, like gold through the end of the year, we've had a very, very seasonally kind of as expected move in gold this year with the kind of out of the gate strength, consolidation middle of the year, and then sort of a push here, third quarter. Fourth quarter expected to be kind of muted for gold and silver, at least in the last 10 years. And we can also see that in silver. So we've had these incredible run-ups in precious metals. I would not be surprised at all if gold and silver, at least stop going up. Like, I don't necessarily think they have to crash or reverse, but I wouldn't be surprised if we saw a little bit of consolidation, some sideways action there on the precious metal side.
Now, but can we just, how many times, and we have been trading for a long time, how many times have you seen gold being that parabolic? It is insane.
Yeah.
I would know. I would have liked to have bought this in 2020 and just held it and thought, Ivan, you're going to be a good kid and never, ever close it again. Because price in gold was 1450 or something in that direction. And now we're at 4,000 and climbing. And for November, it's supposed to have a bit of a dip, and then December is supposed to be great again until February. So I don't know how that's going to drive things, because generally, as we saw this year, November, it's supposed to be bearish, or ever so slightly, and then we're going to pick up from about beginning of December, and then another rise higher. Wow. I don't know. Whatever drives this, I wonder if it ever goes out of fuel.
Yeah, it's certainly something I think, like, trying to call the top on this thing is just, I don't know. I know we've talked about this for years, Ivan, this idea of like, you don't fight big uptrends in NASDAQ and gold, but this year has been by far and away the most I've seen it. I'm sure you've seen this too, in like your coaching sessions, your chats with traders. I know you work with a lot of different traders. I am sure that you have seen people making the same mistake that I've seen, which is just, I've seen more people blow up shorting gold in the last 2 years than ever before in my career on the content creating side of things. Is like, you just have people who just, they cannot stop fighting the trend. I don't know what it is about us as humans, but we want to call the top so bad. We want the heroic feeling of saying, I said gold's going to go down, and look, it went down. And meanwhile, people have just gotten destroyed by this thing moving higher. The winners in all this have been the metals bulls who have just kind of bought and held, or people who have been constructively trading it long.
I have also found in my data set, is that what you can call it? I've also found in my data set people shorting gold and long accounts, and I feel generally sorry that that's how the human brain works, because it's not a new phenomenon to sell gold. And I keep pressing the issue of find out what drives gold, what drives it higher, and is that still present? And it is still present, and it probably going to continue being present, because the reason why gold and precious metals are going so far so high is because of it's because of the downturn in the U.S. economy, the lack of trust in a dollar, the general downturn, and gold seems to become that is only new gold standard, but a new favorite to trade and a new favorite to hold, because also yen was in the party of we sell yen kind of carry trade situation, but that also is going out of town. So it's kind of where do we hide? And it seems to be gold and silver.
The thing is, I mean, exactly right. What you just outlined is the one of the core reasons why gold has been such a monster. We've also seen, I'm looking at the put to call ratio for gold. We've seen still consistently throughout this upward trend, we've seen several instances where extreme amounts of put volume has come in, people trying to bet against the trend. We've seen that just consistently over these last few years. But there was another thing I wanted to add to that, which is just, if you're talking about a regime shift where people are a little less confident in making, all of their investments and all of their eggs in one basket in the U.S. due to all the stuff that has changed in recent years, and the high national debt, and it's not just the Trump tariffs, but it's also high national debt, the uncertainty around government spending in the U.S., the U.S. economy. If there's just a little bit of uncertainty, that goes a long way in derailing the purchasing power of the US dollar. If the dollar is still the reserve currency, but less dominant than it once was, if that is the new regime, gold has tons of upside, as it is a wonderful alternative for a lot of people who are saying that. So again, you're fighting a change in the way of human existence. When you're trying to short gold right now, you are changing something that is actively, or you're fighting something that's actively changing in financial landscape. So it's a tough trade for sure.
I had something beautiful to say, but yeah. And the other part of trading is when something is happening in front of your eyes, how fast do you realize it happening? Is how fast do you realize it's happening? And that could sometimes be the difference between you being lucky and you being prepared for whatever happened, and you were there at the right time, you be at the right time. So to me, I didn't see this coming. If you ask me, but didn't we have predictions? I don't know if you ever we had predictions last year, I think.
Yeah.
And I remember my brain saying this one should go lower. This one should go not 4,000. I was not close to that by any chance, but I think it was even going to go.
Yeah.
Not even here at all.
Yeah, I'd have to go dig that up, but that would be interesting to find. I'll see if I can find it and send it to you. Ivan, we've run out of time. I gotta kick us both out here so we can move on to our next show. But before we do that, if you enjoyed the commentary from Ivan, he is on each Monday on our show. If you also want to check out some of his content, you can find him on YouTube. Just search up his name, IvanFX. We'll also drop the link here to his channel in the chat. If you're interested in one-on-one coaching, that's something he also offers to people who are serious about their trading, looking for that extra help. Consider reaching out to him and finding out more with his one-on-one coaching. He does it at super affordable rates and really great value. I've gotten a lot of positive feedback over the years from people who have taken the opportunity to work with Ivan closer. So if that's something you're interested in, hit him up. Ivan, thanks very much for coming on the show, man.
Thank you very much for having me.
Bye, guys. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello, everyone. Welcome to my segment of the stream. So I do hope everyone is doing well. I'm sure Nick already mentioned what happened during the weekend. So we had a lot of news on Trump. So I'm going to briefly do a recap. Maybe there's some new people that have joined. Basically, if you go to Financial Juice and you go to the market moving news, that's the thing I focus on. You can see first Trump calculating increased tariffs on Chinese products, and then Trump imposing 100% tariff on China. After that, on Sunday, I believe, you had the effect that is called taco. So Trump always chickens out. And on Sunday, he made a post on his Truth Social saying that they're in talks with China. China is okay. There's no massive concern around China, and he kind of walked back on what he said earlier. So that's another case, another example of a taco trade. It's a sort of a trading edge where I think Nick actually went long on the NASDAQ somewhere here, and I think he is still in. So when Trump says something, you can bet against it because you can expect for him to go back on his words. So you can expect for him to chicken out. Now, it's not a guarantee, but it works more, let's say it works 80 or 90% of the time. So that's a really high win rate, right? And that's called a trading edge. So some traders love Trump, some traders hate Trump. In my personal experience, if it wasn't for Trump, I would not be able to get the S&P for my long-term investment at a massive discount. So Trump actually made me money. But then in some cases, Trump can be problematic. For example, with my GBP/USD idea for going short, for selling it, we were looking quite nicely here. So we were starting to break out of this flat range. I was looking to sell GU, and then you had Trump with the news on Friday, which kind of negated this trade idea and made the pound break and retrace back into the range. So I'm going to talk more about this later in the stream. Second most interesting thing, in my opinion, is Bitcoin. So what happened with Bitcoin? Why such a massive sell-off? From the peak, let's say 11%, something like that. And on Friday, we had the bulk of the sell-off. And also, if you watch CoffeeZilla, he did a video explaining how there was a massive sell order on Bitcoin 1 minute before the post from Trump. Okay, so 1 minute before this news, there was basically a massive sell order on Bitcoin. So probably some insider trading, which is pretty interesting to see. Anyways, if you have been following me last week, you would know I was looking for buy trades on Bitcoin. Now, I was looking for a breakout of this resistance level. This resistance level for me was a bit problematic. We were kind of flat. Okay, we were stuck in a flat range. And I wanted to see the price push out of this level and then retest that same exact level where I would get in on a nice buy setup with a tight stop loss. So that was the game plan. Fundamentally, Bitcoin was doing well. NASDAQ was flying. US economy is doing well. You know, it's all about the relative, sort of the relative measure. And a cool indicator you can take a look at in the Edge Finder is here. So economic surprise meter. You can see the global surprise score, and then you can see how the US is kind of outperforming the global surprise score. So that's good to see. With currencies, it's all you're measuring the strength relative to other currencies. Some people are saying, well, look at the NFP. Look at the NFP. It's clearly in a downtrend. The US is struggling. Well, you have to note that these extremely high NFP levels, these extremely, let's say, these exploding job data in the US, it's not the reality. So it's not possible for these numbers to be here for the next 10 years. These are massive, massive NFP numbers. So in my opinion, we're just back to some more realistic numbers in terms of the NFP. What is the most important when looking at the labor market, or what is more important than NFP, is the unemployment rate. For the US, it's 4.3. It's going up just a little bit, but I would say mostly it has been flat. So the unemployment rate tells us the real story. NFP is just going back to some more normal levels, while the unemployment rate is staying the same, staying pretty flat. So the US is doing well. That was my whole idea for buying Bitcoin. Thankfully, I didn't get an entry. So I didn't get an entry. And then on Friday, of course, we had this. So Bitcoin is now off the watch list. Seems to be kind of in the dumps. Seems to be super flat and super corrective. So I'm personally waiting in this one out. I have my level set. I'm not looking to sell it. So I'm just looking at a break of this resistance level, and then I would consider some more buy setups. So for now, just going to be patient, just going to wait it out. I can set an alert if I'm being honest. So we can set an alert here if we do manage to come back up. So what is interesting, as I mentioned, taco trade, Trump always chickens out, which means this massive correction should be erased in the next couple of days or next couple of weeks. And it should be reflected in Bitcoin. So in theory, we should do this. Back to the initial level, back to the Thursday level. That should happen. We will see if that will be the case. For now, being patient. I want to talk about the NASDAQ, because if you have been following me for the last couple of weeks, you know that I'm looking for buy setups on the NASDAQ. So I was also looking for a pullback. Now we started to get a pretty nice, pretty significant pullback on Friday, although I didn't really want to catch a falling knife. Also on Friday, I had a meeting that I had to attend to, so I kind of missed this whole thing live. I wasn't really at my PC. But even if I was, I'm not sure if I would be executing a buy setup. I know Nick was pretty brave to get in. He was betting on the taco trade, on the taco trading edge. You can say it. For me, I'm a bit more conservative, a bit more picky. Okay, so what I wanted to see is today some sort of a rejection, and then I would possibly consider getting in on a buy setup. We have gapped up, so this now is no longer such a great level to get into the NASDAQ, in my personal opinion. I would like for us to go back to this level, or maybe even a bit lower. And at that point, I would start taking some buy setups, some stabs to buy the NASDAQ, okay? That would be the game plan. And that is still the game plan. Just to update you, if you're in the A1 Discord and you're following my trade signals, we have been taken out of the Aussie CAD for break even, okay? So USD CAD, I did close prematurely, but in the end, it did hit the take profit. So pretty happy with this trade. For me, it was plus, I think, 0.96 R. So yeah, now we're out of this trade. I can pretty much just lock it, hide it, and remove it from the watch list. Aussie CAD. Let me see, Aussie CAD. So I was in Aussie CAD. Aussie, I like. CAD, I want to sell it. We have been going to the upside. I trailed my stop loss to below this swing low. So the last position was right here, let's say. Unfortunately, Australia is highly connected to China. So they do a lot of business with China. And any news that affects China is going to affect Australia, is going to affect the Aussie dollar. So with this sort of threat from Trump, the Aussie heavily sold off, unfortunately. So heavy sell-off in the Aussie, which took me out of the position for around break even. So this is now done. I can lock this, hide it. I'm possibly looking to re-enter this position because I still like the Aussie. I still hate the CAD, so I still want to sell the CAD. Taco trade, we're kind of going back to the initial level. So we also gapped up. And as you can see, we're slowly approaching to the Thursday level. So this might have just been a correction in the price, and we may continue higher. So I will consider getting in on another buy position because I think fundamentally, which is the most important part, so fundamentally, this is still a pretty good trade, okay? Now, time to mention the sponsor of today's video. So before we continue with market analysis, before I take a look at your comments, I want to talk about DNA Funded. So if you're looking for a prop firm, you want to expand your trading capital. I was holding a presentation at a traders conference this weekend, and the main issue, they don't have a trading edge, okay? But the second issue is people have very little capital. So they're starting with $500, $1,000, maybe even $5,000 on their personal account, which is not big enough. You cannot do proper risk management on those sort of accounts. So you need more capital. And prop firms are a great way to expand your capital. So here I have an account for presentation purposes. And basically, DNA Funded, we have a 25% discount code for you, which is A1 Live. So specifically for you guys watching the stream, if you do want to get a DNA Funded account, you can do so for 25% off with this discount code right here. Now, what is important with prop firms? I just want to briefly talk about this. So prop firms, there's so much shady competitors in the field. Brokers, it was the same case with brokers, but then the regulations started. And as regulation sort of was implemented, more and more of these shady brokers just disappeared. Well, it's the same with prop firms. Prop firms are a very new concept, and 95% of prop firms out there are pretty much scams. So what you need to look at in a prop firm is first, are they reliable and are they being run as a business? So the people running the prop firm, are they serious? Are they experienced in the field of finance, let's say? Yeah, so be careful. DNA Funded is a reliable firm. It has competitive pricing as well. That is what we recommend. Now, getting back to the charts, I'm going to go through the comments. So let me see what you guys are saying. Hey, Slugmeister, what's up? America is down in my thesis. I expect a recession before Q2. As Coffeezilla says, now crime is legal. I mean, they did the same thing with like Melania coin or Trump coin or whichever coin that they released just before the elections. So it's just super shady business. German 40, yeah, sure, we can look at the DAX. America is not doing well. The stock market is not an indicator of the main street. The markets are at least 6 months to 1 year ahead. Well, I would say America is doing well relative to other countries. So I'm looking at the GDP. I mean, I can bring it up. So I'm looking at the GDP in the States, which is pretty healthy. You have to agree, it looks really healthy. I'm looking at NFP, which is falling, but the numbers are still massive. Okay, the numbers are still massive. Unemployment rate is good relative to other countries. I mean, in Canada, unemployment is 7.2%. Inflation is a bit troubled. So inflation in the United States is above target, 2.9%. It is a bit tricky. So I would say inflation is a problem. Rest of the stuff looks pretty healthy, especially relative to Canada, to the New Zealand, to the UK. Those are the three, I would say, worst performers in 2025. Okay, are you long euro dollar? No, but I can take a look. Swiss, GBP Swiss, sure. Nick, why can't we use fibs to call the top? Well, Nick is not here, so Nick had the previous segment, but it's very hard to call the top. Okay, I would say it's almost impossible to call a top in the market, and retail traders lose so much money because they try and call tops. No one knows if the market will go up or down. You just have probabilities, statistics. Especially, no one knows when the top in the market will arrive, when to sell it. That's why retail traders blow accounts. They try to short silver. They try to short gold. They try to sell the NASDAQ. And they just keep losing money on the way up. They just keep selling and keep losing money. So I would recommend not calling the top, but trying to get in on the uptrend. Try to get in on the trend. That's the easiest, most simplest way to make money in the markets. Just follow the trend. That's what the big guys do as well. Read Market Wizards. In Market Wizards, most of the guys in there are trend followers because it's easier. It's more simple. Are you saying Trump is shady? Yeah, Trump is super shady. But we already knew that. So, yeah, I think Trump winning, not to get into politics, but I think Trump is better for America than the other side, Biden and Kamala. But Trump is still super shady. So essentially, I don't think there's one good candidate for the presidency of the United States. But Trump is sort of the necessary evil. Yeah. I'm a US citizen. Which broker should I use so that I can trade CFDs? You should go to the A1 trading website and they have recommended brokers. So just type in A1 trading recommended brokers. And those are the brokers that we recommend and that Nick recommends as well. Okay. Okay. Slugmeister says, I think if JPY hikes rates, it could be a nice carry trade. Swiss yen. So let's go to the carry trade scanner. CHF JPY. Whoop, have to go all caps. Okay, so yeah, if they do hike rates to 1%, let's say, if the quote currency rate becomes 1%, it could be a good carry trade. Let me check the chart. Swiss JPY. Haven't seen this one in a while. I mean, we would have to sell it, and the trend is clearly to the upside. So I'm not sure exactly how you would structure it. You would have to go short. You would have to go short against this overall uptrend. Now, is that really the best trade? For me, it's not, because you're battling the huge uptrend on the daily chart. What is Market Wizards? Sorry, I'm new to trading. Yeah, no worries. So Market Wizards is the most popular book you should read if you're interested in trading. So just type in Jack Schwager Market Wizards. Okay, there's 3 parts, I think. Just read the first part. The best book, I absolutely recommend it. It's the best book if you want to be a trader. And it's going to tell you a lot of things that you need to hear in order not to lose money in the markets. Okay, almost as shady as Nancy Pelosi with a long history of insider trading to the cost of man on the street. Absolutely. I mean, there's even an indicator where you can follow Nancy Pelosi and see exactly which things she is buying. It's crazy. America has a lot of advantages, but a lot of shady stuff as well. Just the reality. So Trading in the Zone helped me a lot. Trading in the Zone is another awesome book. I personally prefer Market Wizards because it's based on real people, real live examples, real like profits in the markets, while Trading in the Zone is more about psychology and not really about the trading edge. Okay, Market Wizards, they really share what their trading edge is. So you can see how hard it is to make money in the markets. Now, to take on the requests. First one was the DAX. Okay, so let's take a look at the DAX, German 40. We had an attempt to break out of this resistance right here. There was an attempt. It wasn't successful. I already took 2 losses inside of this range. I'm not looking to take a third one. I'm being careful. I want to see a clear breakout out of this resistance level. Okay, a clear breakout to the upside. And then I would consider getting in on some buy setups. As far as the euro goes, let me check the economy. So EU, it's not really looking the best. Most of the recent data is coming out worse than expected. So that's not really a great sign. This is not my favorite thing to trade. That's why it's not on my main watch list. If we do manage to break to the upside, I will look into it. I will consider some buy setups, but I just think the DAX is going to underperform the NASDAQ and it's just going to stay choppy. I just think this is going to be a chop fest. Of course, I don't want to buy inside of the range because it's going to be negative swaps. It's going to be an expensive position to hold. So I'm being patient. I'm being patient on the DAX. Let's see. The DAX was the first one. GBP CHF was the second one. Let me see. GBP CHF. This one, in my personal opinion, looks pretty flat. I'm not seeing a big trend here. Let me see the top setups. GBP CHF. Bullish. Okay, we're getting a bullish reading. I don't see an uptrend. So the fundamentals may be bullish. Technical analysis doesn't look great. So I personally don't have a massive trading edge here. If you can tell me, are you looking to buy it? Are you looking to sell it? We can do some more analysis. But I would say there's better opportunities out there. GBP/CHF is not on my radar. EuroCAD. I'm in a trade. So if you're in the A1 Discord, and if you do want to join the A1 Discord, if you want to get my trade signals, you can use my discount code, which is MARKO. So that works for the Edge Finder if you want to get the software, and it works for the Discord if you want to become a premium Discord member. So all of the links will be in the description of the stream, and you get a nice discount. So I'm still in this trade. I'm still in EuroCAD. I'm holding it. The Trump news from Friday was good for the euro. Essentially, when there's drama, when there's uncertainty, when there's tariffs, people usually sell the dollar. They go into the euro. So euro tends to appreciate. That's what happened. Now we're back into drawdown. I'm not concerned. So I still think the euro is good. I still want to sell the CAD. If this position goes on for the next 2 to 3 months, that'll be fine. I'm prepared to hold. So yeah, for now, just leaving this position in the markets and continuing to hold my my trade. I'm bullish. I think this is a nice area to buy. So this is not financial advice, but if I was not already in this trade, I would possibly be looking to get in at this level. Okay, let's see. After Euro CAD, what did we have? Mark Douglas is by far the best. Turtle Traders, yeah, that's everything that you're mentioning is great. Doesn't look like I can trade gold on these as a US citizen, unfortunately. So I'm guessing you went through the brokers on the A1 website. If you didn't find any, I would try and ask ChatGPT. ChatGPT is pretty good with searching up brokers that fit your needs. If you want to trade gold and you cannot trade gold on the brokers that we offer, maybe you can do some searching for ChatGPT. But you should be able to trade gold. If you're in the US, you should be able to. USDN shorts, USDJPY. So UJ. We had the news from Japan. We had the unexpected winner, unexpected prime minister. She is supposed to be dovish. That kind of makes the yen lose value. Am I going to place trades around this? Well, maybe. I haven't yet decided. We have broken out of this key level of resistance. That is good to see. Then on Friday, the dollar lost some value, but I would say maybe if we can get in on a nice buy trade, it's positive swaps. If we check the carry trade scanner, USDJPY, see, positive swaps. Interest rate divergence, positive swaps. So you get paid to be in the position. So I like potential buy setups. Let me check the top setups. USDJPY. Yeah, so the edge finder is neutral. I'm not 100% certain in what the trading edge would be behind this trade. Maybe it would be because the new prime minister is dovish and the dollar is expected to gain some value in the next few weeks. I'm bullish on the dollar, if I'm being honest. So that could be an edge. I just haven't decided yet. So I'll keep monitoring the situation. I'm definitely more bullish than bearish. And I'm kind of interested to search for buy setups. So yeah, we'll see. So Slugmeister says NZD-USD position has been a monster. Yeah, that has been definitely a great trade. So if you manage to go short, which I think you're in somewhere from here, and now it's running quite nicely. So congratulations on that. Looking to add to my shorts, well, that could be a good plan. I'm definitely bearish on New Zealand, and I like the dollar, so this is a good pair to watch. I would focus on executing setups around the 20 EMA. So on a possible pullback. Actually, let me see if I can place an alert here. Let's see the edge finder as well. Neutral. Okay, so the edge finder is neutral for the short term. For the long term, I'm thinking the New Zealand dollar is weak. Roberto says, hi Marco, what trades did you place on the recent dip? I haven't placed any. So Trump walked back on his words on the weekend. So we gapped up. And because of that, there's no longer a massive discount. So I didn't get into anything. Bitcoin, I was looking to buy here on the top. Fortunately, I didn't. Am I looking to buy the dip now? No. I want to see a breakout into all-time highs first. Okay, let's see. A Ballout says you cannot trade gold spot for USA citizens, futures or ETF. Okay, so Yeah, I'm from Europe, so I'm not sure about the States, but looks like if you want to trade gold, you have to look at futures or ETFs. Okay, so that's an interesting insight. I'm in short of UJ since last week. Well, that kind of goes against my personal analysis, my personal view. I'm looking to buy. I want to get in buy setups. You're short from 151.985. That's going to be an expensive position because of the swaps. This is, of course, not financial advice, but I don't see a huge edge in being short UJ right now. I just don't see it. If it works for you, if it follows your plan, then that's completely fine. I'm looking to buy it. Nasdaq 100, I'm looking for a bigger pullback. I'm looking for a bigger discount, and then I will be a buyer. Hey Joshua, what's up? Have you ever seen a rally this big? Gold and silver are absolutely exploding. That is correct. This is a massive rally. It has happened in the past. This is nothing new. I want to buy. I don't want to catch the all-time highs. I don't want to catch this extreme high. I want to get in on a pullback, of course. But this happens from time to time. You know, there's periods, there's years of stagnation, and then there is years of massive explosion, massive outperformance. This is just the way the markets work, okay? SPX or the NASDAQ. Yeah, so we kind of already went through the NASDAQ. I can do the S&P, but I mean, they look pretty similarly. So they've had a massive sell-off on Friday. Now they have gapped up. I no longer think this is a nice discount. I no longer think this is the pullback that I wanted to see. So I'm being more patient. I'm not getting in at this level. Yeah, I didn't catch the falling knife. It was a good taco trade, so Trump always chickens out. But right now, I think we're just going to go back to the all-time highs. I mean, this has been a one-time event, just tariff announcement, and then he walks back. So I think this happens, right? That is my forecast. The last thing I want to analyze for today, I know I didn't go through all of the questions, but I will be live streaming every day this week. So you can catch me. You have the schedule, the live stream schedule. So it is at A1 Trading live stream schedule. You can see exactly when I will be on, okay? So this just needs to be updated. And you can ask me any questions that I missed for today. The last thing I want to analyze is the GBP/USD. I may have mentioned this at the beginning, but I want to quickly repeat myself. So it is on the watch list. I'm looking to get in. I'm looking to sell it. I don't like the pound. I do like the US dollar. This is positive swaps. I just need to see a bit more bearish momentum. So I just need to see a bit more conviction, a bit more follow through, and then I would be interested in selling the pound and the US dollar. That is about it. Don't forget to check out DNA Funded and use our discount code, which is A1Live, for 25% off. And I will catch you tomorrow. So good luck in the markets. Watch out for Trump. So create a Truth Social account if you need to. Watch out for the tweets. That's it. See you. Goodbye.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.